Good morning, guys. Welcome to this Tuesday, July 15th, and it is CPI data, CPI Tuesday, CPI Tuesday. We have that's the only piece of news we have in front of us. Overnight pop pretty good, and the only news I can find which is driving that, and they confirmed it with some stock pricing, is the Nvidia China information. Looks like they have some sales information coming out of China for some chips or something like that. So Nvidia is up $7 in the pre-market, which is pretty good. This is a big stock, and it's up $7 in the pre-market. Yay! So that's the reason the overnight popped like it did, but it made new highs, and we are in, we are borderline. Yeah, we're looking at the move out of the middle to the upside developing. So pretty freaking interesting. The so far the July weakness hasn't come out, hasn't really started materializing it yet. Knock on wood. Let's hope that doesn't. We had city earnings come out. They had a big beat that came out right now. So I thought it was going to come out later in the week, but I guess they're coming out this week. So right now, so earnings season has begun, as you know. So we're going to get bank earnings usually start, and then we're going to start getting earnings from various companies throughout the next 2, 3 weeks, and that's going to be in middle of the summer, a lot of cross currents. It's going to be fun. So starting off here, you can see here on the capital flow, we are right up here against the upper levels, and we are borderline in a breakout onto the upside again. Today's news, and that's the only thing we have, the CPI number coming out at 8:30, Empire State Manufacturing as well, but I think the focus is going to be on that CPI number. We have Michelle Bauman speaking at 9:15, and Barr at 12:45, Barkin at 1. So it's Fed speakers throughout the day. I don't know why they're out there talking all the time, and it just creates cross currents and confusion, but there you have it, a bunch of Fed speakers out there today as well. But the CPI number, I think, is the focus for this morning, and if that comes out in a good way to the downside, even if it ticks up a little, I don't think that's going to be a huge issue. But if it's some kind of surprise to the upside, that would be an issue. The only thing I can think of in the short term would have been oil that traded higher during this Middle East conflict. It could potentially have created some energy inflation, but it wasn't there for too long, so it wasn't high for too long. So we'll see how that shakes out. But it's on the upside, and I would say we are in pretty good shape to take this higher. So given Nvidia news going into the overnight CPI number, expecting a reasonable number, or at least not a surprise to the upside, we are everything lined up for a potential move to the upside. We will see. Now, it could also be as been one of these big fake outs where it starts trading higher in the overnight and the day session knocks it down. It happens pretty much regularly. So if that starts happening, you start seeing that early weakness turning into a little bit more, then I would just stay on the short side and see how a rotation back to the mean here could happen pretty quick. But we are up here at an upper edge. We haven't quite taken it out, even if it looks like they're definitely probing it. But I just have to see how the CPI number comes out, and then of course, as the day session kicks out, if this overnight strength can be maintained. But I would start off from the long side, at least to get started, to see if we can retest these highs, potentially take it higher. Looking to buy against that 25s and the 15s, and that's it. That's not going to be more aggressive than that on the buying opportunities. Because sometimes when you have this happening, when the overnight trades higher in a piece of news, the day session knocks it down hard. We also have that CPI number to contend with. So uh, starting off from the long side, looking to buy against the 25s and the 15s for rotations back up. Below 15s, I'm just back range bound right away. So that's kind of the way I'm looking at it. And if it starts taking out the highs and starts coming up to the 35s and the 45s, definitely opportunity for shorts, but not going to be super aggressive on them until that's going to give it a little bit of room. But they're definitely valid because we haven't quite broken out yet. So they're still in a pretty good spot for a potential retest failure setup. And if you pay attention in the way early on here, if the day session begins as it opens, or given also that the CPI number comes out not creating a big directional move, all right? If it doesn't do that, and I don't expect that, I expect a bit of volatility, but not the directional move in a big way. But if that happens, and then you have the day session start with a bit of strength, running it up here, that's where you have an opportunity for a short. And it's going to happen here at the 35 or 45s if it happens, and then we'll see if it's going to try to knock it down. But even if you get in when they start taking out the 25s, so if you see early strength in B period and it starts trending higher, and then they start retracing it and taking out the 25s, I would look for a short trade there. See if they can take it down, testing the 15. So that's a few points to the downside. You could be in that trade then. Maybe exit at 15. You want to be not as aggressive, or if they're going to start taking that lower, it could be a nice trade to the downside. So, but at this point, starting off still from the long side until we see confirmation or some evidence that we are heading lower. So we're up here retesting the high. So we have a retest of the 35s. We have probed a bit to the upside. So in this area, we could see a nice retest failure trade setting up as the day session gets started. But a big caveat before that happens is that we have a CPI that comes out without any big directional moves. All right. And if they start taking out the 15s, I would just stay on the short side. Don't buy into so don't sell into support areas. That's the only thing you have to think about if they start knocking this down in the beginning of the day session. So as you trade into the 15s, don't sell into that. Don't sell into this 6,300. You're looking for buying opportunities here all the way down here towards the until you get in capital flow really all the way down here, taking out that 62.25. So almost 100 points to the downside. That would be a pretty nasty day if they run it that far down. Don't see that happening given the news we have right now, but always keep your mind open. The market's going to do what it's going to do, and you can only try to trade with it. So initially, looking to buy again down to this main support area, and below that go back range bound. If they start trading, if you see that early strength in B period, they start trying to take it higher, then fail and start retracing. As they take out that London low, that's where you want to try to get short. So that's the kind of setups I'm seeing this morning. But let's see. Starting off on the long side, let's see how far it can take it. Looking at the bonds and the Nasdaq. And Nasdaq probably going to get a good bump based on the Nvidia news. But bond market's not doing much. It's just kind of holding in a range. And kind of spend too much time on it. We're still in this capital flow range. Unless it starts breaking out of that range, capital flow is just flat out range bound. Exchange members chart is flat out range bound. You see up and down days. It runs back and forth. And right now it looks like they stalled at the 12.16s. So I'm starting off range bound, looking to buy against the 12.22, 12.16s, looking to sell against strength, 13.02, 13.08. So I'm going to leave it as a fairly tight range. To trade above the 08s, trade below the 20 and the 16s, we have a potential direction. And again, it depends on what the CPI number does here as it comes out around about 15 minutes from now. Nasdaq, nice move to the upside. Here you have a move out of the middle. I think this is pretty much starting off as a move out of the middle. Nasdaq, and that's the Nvidia news, taking out the highs and clearly above, not just at the edge, but clearly above the edge. So this one we have to start on the move out of the middle dynamic, and looking to buy weakness on this guy as well. If it starts trading below, I would say, oops, get rid of this chart. If it starts trading below the 23,100, give it one more level below the 23,060s. If they trade that far down, I would take off the long bias, and I would look to hop on the short side below the 23,000s. Right? If they knock it down below the London low here, or below the session lows, I would be there looking for a retracement down retracement back down towards the 22,800 attractor. That's your attractor on the downside. And if you want to see what that looks like, since I mentioned it, this is your attractor right there on the downside. There's volume above it, but here's a pretty clear attractor at the 22,800, and also a key decision point if they're going to really take this lower. So they back off below that 23,000s. We are back range bound, and below that level down there, then we start leaning in on the short side. They're still technically in a range until they go down all the way down to the 22,600. So it is a wide range on the Nasdaq. So if you get swings on the Nasdaq, that could be pretty wild days. Wild days, and it could be nice money makers if you're on the right side of it. So we're starting off on the long side, looking to buy weakness against the 23 130s, the 100s, the 60s. Below 60s, take off the long bias. Below the 23,000, go back, start thinking short side. But they're still looking to buy against these support areas on the way down. So don't try to sell into one of these support areas. That's the most common problem and mistake you can do. You end up doing that. And it happens to every one of us. It's not by any means anything uncommon. It happens to anyone. I just adjusted a couple of edges I noticed here. Once you get into the heat of battle, you lose perspective and you stare at the fast screens and you lose perspective. That is usually the reason for it. Take a step back. Always keep an F2 around you close by so you can see the overall perspective on the market is at. But that's how we get started on the Nasdaq, and the same story there. You start seeing some strength in B period. They run it higher and then start failing as they take out that London low. You can be fairly aggressive on the short side at that point, I would, and see how far they can take it. But that it kind of implies that you're not getting just a little rotation back and forth. You're getting a little bit of strength on right at the beginning, and then they fail. That's usually when they try to knock it down harder. And that would be it's not necessarily a panic sell-off. It's just that they start selling, they start profit taking, the pile-on effect, and all that stuff starts happening. All right, so that's the Nasdaq. Both these the Nasdaq starting from the long side this morning. Looking at oil and gold finally, and oil settling in around about 66, 67. In the bigger picture, oil is capital flow. This is 15. I think we're rolling. What is it? It's 16. I forget what the data was again. At 16 or 17, we're rolling. So the rollover is coming up here this week for oil. The roll to the September contract. But here you have it. So they were up here. They knocked it down hard yesterday. We're pretty much smack in the middle of this range. So I would just start off range bound. We got a little bit of weakness in the overnight. That's how we started off the overnight on oil, looking for retest of the lows potentially lower. And they pretty much stalled here. I think it is 66.20, 25. So pretty much holding in a range. I would start off range bound. I would look to sell strength 67, 67.50s up to the 60 or 68s almost. I would look to buy weakness. Probably not this first level there, but the 66.50s, 66.20s, maybe down to the 65.60s here for rotations back up. So a few levels up, few levels down. If they start trading below 64.50 and that low volume area at 64, that's when you really get that's when it starts heading lower. And they take that out, we're heading lower on the short side on that one. The same story there. If they start taking out the 68.70 to 69s, I would be on the long side and see how far they can retrace it. But at this point, oil is just kind of in a holding pattern, I think, until they figure out what's happening in the Russia-Ukraine situation. But I think the part of the remedy there is going to be to drive oil prices down to cut off the funding for the war, and that's going to be good. It's a good it's been a good strategy all along, right? On lower oil prices, lower inflation, energy inflation, lower gas prices, everything comes down, and the bad actors don't have any money to play with. So how can that be bad? That's a pretty good strategy. Anyway, so I'm expecting oil prices to come down. It's just going to take a little bit of work on the policy side and on the exploration side. So gold still to the upside. I thought they're going to actually run it down here to the 40s in the overnight, but looks like they held that 50 level and then right back up again. Reverse retested 75. And now it's back down and heading back down again. So I'm not quite sure if this is a fake out or if it's something else. You just have to see how that thing develops. But in the bigger picture, they haven't taken out that 3370. They were up here probing, they backed off. So I would start off range bound on this one. I would be looking for a retest of that 50s, maybe lower. If they start trading back above the 75s, I would be back on the long side again. But at this point, it looks to me like they reverse retested this level in the overnight, and then basically start heading lower now. So chances are we're going to see a test of the 33.50s, yes, 33.50s, and that comes out probably right back down into this lower range again. We'll see. But that's kind of the dynamic now. So starting off range bound on gold, expecting that the assumptions right now that retest failure held. There could still be a run up here to test that still in the market, I guess, but I'm not going to assume that right now. It looks like they spent a fair amount of time in overnight here, and chances are they're going to be trying to take it back down here towards the mean. But I will watch still. The last level will be at the 33.50. That holds, we may still have a shot at trading back up again. But at this point, looking for that early weakness on gold, so it can retest the lows, potentially head back down again. All right, so that's gold. Capital flow is pointed higher on gold still, or I would say it's almost coming back range bound, but they've been, since that move, they've been back up here again, and they are pretty much been trying to trade it higher. So they're consolidating right now. They haven't quite backed off in a way where you think that the capital changes. I would say it leans long. It's coming to balance, if anything, but coming to balance at pretty high prices. So at this point on gold, we're going to be range bound, and then see if they can bust through this to the upside, or which I think is more likely to have happened, and retrace it back here towards the 40s, maybe a little bit lower. All right, so that's where we are on gold. So range bound gold to get started. Same with oil, range bound trading on that guy. You know what levels to watch. Back to the ES, and okay, backing off a little bit. It's coming back down a bit, but it's still plenty of edges to look for long setups again. So that's to remind ourselves on the ES. We have CPI coming out, waiting for that reaction. I'm expecting a more volatile but not directional move. If the directional move does occur, then we try that direction until we see it not working. And if it's volatile but not direction, and we just fall back on the analysis. Following that, if we see the open starts trading higher with a bit of strength in B period and then failing, that's when we are looking for a short below that 25s. So if they immediately start trading below the 25s, that's not the short I'm looking for. I'm looking more for that strength to occur and then the failure. That would be a better short here. Otherwise, I would be looking at buying more aggressively on the pullbacks. All right, so two different dynamics depending on what side they're going to go on from the get-go. So you start seeing that early weakness right from the get, it just starts taking this lower. You're just looking to buy against the 25s, the 15s. Below 15, we go back range bound. If they start trading higher in B period as the day session opens, and then start failing, it can't take it. Maybe making you high, but then fails, starts trading lower. When they take out that 25 in that dynamic, then I would be more aggressive on the short side. All right, so that's how we get started. We have a few more minutes, and then we get the CPI read, and then we'll take it from there. So I'll wrap it there. Good trading, guys. And I'm going to be seeing you back at 11:30 for the next update. Later.